Reportedly thinking about letting taxpayers invest in bailouts, but aren't taxpayers already financing the bailouts? So we're going to invest in our own money, or I don't know. You are able to do that logic better than I am. Well, let's get two different perspectives on each of these. Gerard Cassidy, bank analyst from RBC Capital Markets. He joins us on the telly. And William Black, author of The Best Way to Rob a Bank is to Own One. That's the best name of a book ever. He was a regulator during the savings and loan crisis. Mr. Black, let's start off with you. These stress tests, is it a sham? Do we need them? What do we make of this New York Times report? They talked to some anonymous sources that said the tests so far show that everything is A-OK. We're just dandy.
It's a sham. Secretary Geithner has already said that it's going to take $2 trillion to deal with the financial hole, and every bank is reporting that it's well capitalized, and now we're supposed to be told that they're not only well capitalized, but even if there's a terrible recession, there won't be any problem at all. Well, the two things can't be true at the same time, so there's a lot of lying going on.
Mr. Black, you had a great interview with Bill Moyer earlier, and you talked about, basically, you used the word cover-up, and you said that Treasury Geithner, Paulson, Ken Lewis, Vikram Pandit, and I don't want to put any names in your mouth, but you did highlight a lot of it, specific people saying that these guys are basically colluding to continually covering up and defrauding the American public about the reality of their financials.
Right. Well, Geithner, again, is saying there's a $2 trillion hole at the same time that the banks are being permitted, typically by, ever flakier accounting, to say that they not only are solvent but supposedly well capitalized, and now that we're supposed to believe that even if the recession deepens severely, there'll be no problem. It can't be true if there's a $2 trillion hole. If there's a $2 trillion hole, and most analysts think it's bigger than $2 trillion, then that says you've got massive accounting fraud, and it's being covered up.
Gerard, let's bring you in on this discussion a little bit. Even if you don't have faith in Tim Geithner, even if you don't have faith in the administration, the way they're handling things, is there a possibility that the economy rights itself and the banks will, in fact, be A-OK, even without Geithner's help?
I don't think they're going to be A-OK, and I think what's happening is there's a misuse of words in these news reports, and when you hear the word nobody's going to fail the stress test, I think some people are alluding to the fact that there will not be any banks that are going to become insolvent as a result of the stress test, which is entirely different than failing the stress test from the original intent. Because in that same story that you guys referenced in the New York Times, they went on to say that banks are still going to be, still need to raise capital. To William Black's point, we need more capital in this banking system. So we think you're going to see capital raises done by the banks, or they're going to tap into the CAP program that the government has announced.
So then, Mr. Black, let me ask you that then. They need more money, which means they're not profitable. They're, what about all the write-downs that they still have yet to take because they're valuing all these assets at 80 cents on the dollar when really they're only worth probably 40 cents on the dollar? And what about all the write-downs that have yet to come through that aren't even on the books yet?
Well, accounting dishonesty is the Achilles heel to any program of honesty, and that's exactly what we're involved in. Remember, we statutorily mandated stress tests. Do you remember which companies we mandated it for?
The big ones that got the welfare.
Fannie and Freddie. And they said, oh, this is a nuclear winter scenario. We could survive anything, and we would barely show a scar. Well, what's happened to Fannie and Freddie?
Mr. Black, let me just take this, if you don't mind, Cody. I'm going to jump in on you a little bit. But how do you go ahead and then explain Wells Fargo posting a $3 billion profitable quarter when every analyst on the street and their brother were looking for less than half that number? So are banks in as bad of shape as people like you would have us believe?
No, they're in worse shape. You said yourself they're 40% down. Remember, folks, for 17 years, the Nikkei lost 75% of its value and stayed that way. And since then, it's gotten worse.
Gerard, you know, that's just it. I want to stay on this accounting fraud cover-up, basically. And I mean, it starts from Washington and it runs to Wall Street. And we're supposed to mark-to-mark accounting and all of this stuff. It's just more of the same sham. Meanwhile, the facts do speak for themselves. It's trillions of dollars of welfare money that's funding the banks. Otherwise, they're quote-unquote, the financial system is going to implode. It looks to me like we have imploded. How do we get through the implosion?
I think there's a couple of things we have to focus on. Number one, the U.S. banking industry does not use mark-to-market accounting for the vast majority of its assets, which, of course, are loans. And the reason they don't is that it's a leveraged system. And to go to mark-to-market accounting for the loan portfolios, which if we did, I would be in the camp that the system is insolvent today. But we cannot do that because of the leverage. Now, maybe over time...
Gerard, that's Mr. Black, that's Dr. Black's point exactly. We say we can't do it because of the leverage, so we have to lie to the American public continually? How about we own up with the fact that it is insolvent and we deal with the reality of it?
No, but in every recession, whether it was the 80-82 recession, 90-91, the banking system was insolvent in those two periods as well. And the way you get out of these problems is, as you saw with Wells Fargo today, is you allow these banks to grow out of the problems. The thing about Wells, they had two unique, we think, unique facts to them, which is not applicable to everybody, which is, number one, they had purchase accounting benefits from the Wachovia deal, and number two, they're one of the largest residential mortgage lenders, and the refi business was very powerful, as you all saw in this quarter. Now, is this going to help Susquehanna, SQ, who announced today a big uptick in non-performing assets? Absolutely not. These numbers you saw for Wells are only for Wells and a few others. Most of the banks this quarter are going to have awful numbers.
Okay, so William Black, then, how do we get out of this mess? You know, you were in power during the savings and loan crisis and got us out of that. You know, everybody points to that as a success story. If you were in charge today, what would you do?
Well, we would repeat the success of the past instead of following the Japanese strategy that we told them for 15 years was a stupid strategy, and is, of course, the one we've adopted in this crisis.
So what does that mean?
Go ahead, yeah.
Tell us.
Finish that statement.
I was too young to remember.
Well, I remember, so go ahead. You tell us.
The Japanese crisis, we said, hey, the banks are fine. Don't recognize your losses. Don't close insolvent banks. Don't take them out of the hands of the people that caused the failure.
Mr. Black, in all due respect, tell us what you did when you were involved with the S&L crisis and how that would apply here.
We took the banks that were hopelessly insolvent. We got them under new, competent business managers. There were no political commissars. There were no scandals of funding people's campaigns. They worked them out, the bad assets, and you got a prompt recovery.
You nationalized them, basically.
Bingo.
No,
you nationalized them.
Bingo.
We did this under Ronald Reagan.
But you
right? No one ever used.
I know.
But are you arguing, Dr. Black, you did nationalize and then reprivatize, and we've got to go through, apparently, this nationalizing step in order to get through the reprivatizing
But Mr.
step.
Black, so many people are against nationalization, and if it worked before, that's what I see the disconnect there.
This is just a pejorative label. There was never a government-run czar guy type of thing. We got competent managers in who got the place in shape to be promptly sold back into private interests.
Before we wrap up, can I just ask you a follow-up question to that? We're running out of time, so just answer quickly. But everybody's saying, oh, my God, we're becoming a socialist country if we do that. You agree or disagree?
Well, then Ronald Reagan was a communist.
All right, well, fair enough, guys. Gerard Cassidy.
From RBC Capital Markets and William Black, thanks for joining us.